Hey, what's up, nerds? I recently sold a box of Kamigawa Neon Dynasty set boosters, just like this one, for $129.99 on TCG Player. Of course, there were fees, so I netted $112.94, and then I had to ship it, but I did recycle a box. Shipping tape does cost a little bit. This box cost me $105.89 when I purchased it 3 years ago. Why did I sell it now? So I know what you're thinking. I am the worst Magic the Gathering investor of all time. And maybe that's true. Some of you are going to say buy-in cost and blah, 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 and wait time and etc.
Business. Numbers. Is this working? Yes. Yay!
I got to tell you the truth. I'm tired of waiting. So why did I sell this now? It's all about the opportunity cost. Had I put that $105.89 in a simple savings account, gaining 4% interest, which is pretty easy to find nowadays, I would have $119.11 right now. I've had to make the tough decision that most of my cardboard legacy is worth a tiny loss to get back on the earning train. Opportunity cost is the idea of considering what you're giving up by choosing one investment over another. Let me break it down a little bit. So the number one thing is tying up capital. When you buy sealed Magic the Gathering boxes, your money is locked away in shiny cardboard bricks that sit in your closet gathering dust and hopefully value. That same money could be earning interest in a savings account, growing in the stock market, or funding a business venture. Instead, it's funding your dream of selling your Zendikar Rising boxes for a profit in 2040.
I'm rich! I'm wealthy! Yahoo!
So then there's the risk versus other investments. Sealed Magic the Gathering boxes can appreciate in value, but they're highly speculative. You're betting that players, collectors, or investors will care about that set years down the line. And maybe they will. But meanwhile, more traditional investments like index funds provide historical growth averages of 7 to 10% annually. Why bet on cardboard when you could bet on the global economy? I do have to admit that I did buy a box of Stronghold years ago for $500. And then I sold it within a year for $1,000. I know. It's gone much higher than that now. But to make $500 on a $500 investment in a year, this is a pretty good choice.
Show me the money.
Just this new Magic is so overprinted and so oversaturated, and the reprint train is never going to stop. So then you got your storage and maintenance costs. Yeah, I know. It sounds like, well, I'm just putting them in my closet at home, right? But keeping them in pristine condition isn't free. You might need climate-controlled storage, protective cases, insurance. I mean, if you do have thousands of dollars of Magic cards in your closet, you probably want to make sure that it's covered in case of a fire or a flood or something like that.
Oh, please! Save my baby!
Opportunity cost here is the effort and money spent maintaining these boxes versus investing in something with lower upkeep, like EFTs or bonds that don't care about humidity levels. So number 4 is liquidity challenges. Liquidity. Are we liquefying our cards? No, this is the ability to sell something, kind of like how long it takes to sell something. So sealed Magic the Gathering boxes aren't the most liquid assets. If you need quick cash, selling them can take time, especially if you're aiming for top dollar. And trust me, people aren't paying top dollar. They're looking for the lowest price from the best seller. Compare this to other investments like stocks or EFTs that can be liquidated instantly with a few clicks online. So let's get real here. Number 5 is nostalgia versus profit. And yes, I am the nostalgia hound. There's a reason why this site is called Nerd Crypt, because I like all my nerdy stuff from when I was a young man. But let's be real. Part of this appeal in investing in Magic is the emotional thrill of owning something special from your favorite game. But emotions don't pay the bills. The opportunity cost here is not channeling your funds into an objective, unemotional investments that prioritize returns over sentimentality. I know it's tough because I'm guilty of it. And I'm sad I let that last box of Fallen Empires go for $200 several years ago. Not because it's worth $500 now or $400 or whatever they're going for, because that was an important part of my youth. But sometimes you got to get real, especially when you get old.
I'm an old man! I'm confused!
So the bottom line is this. By investing in sealed Magic the Gathering boxes, you're sacrificing other opportunities to grow your money. likely with less risk, less maintenance, and more predictable returns. Sure, there's a chance that that double Masters box will fund your retirement, but there's an equal chance that it'll be worth only sentimental value in a market flooded with reprints and waning player interest. If you love Magic, go ahead and buy sealed boxes, but do it because you enjoy the game, not because you think it will outperform a diversified portfolio. I'm still keeping a few of my favorite boxes around. I'll keep one of these just in case it does fund my retirement someday. And if it doesn't, I'll open it and enjoy the cards. Hey, thanks for watching, nerds. Tell me what you think down in the comments. People have very mixed feelings on this, but the emotions are high. I don't feel so emotionally attached to my index funds. It's very true, but that's all right. Take care, everybody. Have a great week. Stay awesome out there. Be kind to each other.